Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 10th of October, and it's up and away for the FTSE 100 today, which is perhaps a little surprising, up 1.5%, melted through the 50-day moving average there at 75.10, like a blowtorch through butter, and fast approaching the 200-day moving average at 76.40. That's the next level, but the real level here, probably the top of that falling February trend channel, 77.35. We'd like to get through that to kill the descending pattern that we've had on the market since that February peak. Above that, and it's the top of the August rising trend channel shown in red there at 78.40. But the moment is still feeling quite chipper while we're above that 50-day line at 75.10 and not expecting price action now below that ahead of an attempt on the 200-day line. Moving along to the DAX, and here not only have we bounced off the floor of that falling trend channel from May, 15,100, but we've actually gapped. It's a bear trap gap reversal. There's bullish divergence there as well, lower low for October, but higher RSI trace, so it's like a bona fide turnaround here for the DAX, which again seems rather counterintuitive. Initial target here was 15,500, but we can probably stretch that now to 15,900, hopefully well before the end of this month, while we remain above 15,100. On to the Dow, and here was looking rather weak over the course of last week, but from Friday onwards things have bounced back well. Higher low versus back in May, 38,600, and the view now is that after that key reversal higher on Friday, we're looking at the 200-day line 33,800 initially, and then up to the 50-day line 34,400 by the end of the month. Still a long way to go to get back into that rising trend channel that we had from October to back in September, back in last month until the breakdown. Moving along to Bitcoin, and here you can see that it's still all about that mini range between the 50-day line and the January uptrend line, 26,500, and the 200-day moving average in 28,000. Want to see an end-of-day close through 28,000 to give us a chance of revival up to 30,000. Hopefully by the end of this month that could be resolved, and then maybe by the end of the year partying at 34,000. But obviously that is quite a positive spin. Breaking 26,400, and we could be back testing the post-June support 25,000, but we're not really looking for that. We're really hoping that we'll stay above that 50-day line and break through the 200-day line. RSI at 57, which is just in the right place for breaking to the upside. Moving on to the stocks, and there's a sigh of relief at Bushveld Minerals. Maybe this or today's RNS is the trigger for a turnaround. We've had many false dawns all the way down from July and 3.5 pence plus. Need to break that line of resistance there, the top of the falling wedge from July around the 1 3/4 pence level. If we can do that, we could be looking at the 50-day line and at the top of a September triangle at 2.1 pence by the end of this month, i.e. as soon as the end of this month. We've got bullish divergence as well, so lower low there for October, but higher RSI trace. So apart from a gap high, we've got everything going on there. On to C metals, or in other words, capital metals. Let's get it right. Here I was looking for the shares to fill that gap up to 2.2 pence. By the end of next month. It looks like as though we'll probably do that by the end of, maybe by the end of this week, in fact. Unfilled gap to the upside. We had the sideways shuffle above a rising 50-day moving average, so maybe somebody in the market guessed what was going to be announced today. Bullish divergence as well. Everything going on here in a nice way. Above a 2.25 pence, and the top of that gap, we're looking for at least 2.5 pence. By the end of this month. And as I said, the way things are going, it could be rather quicker. If you're a fan of the shares and looking for greater glories, then the glory would be that we would hit the resistance line there from last November as high as 4 pence by the end of this November. So let's see if Capital Metals can step up to the plate. The other point to note is that it's a bear trap island reversal, so we gapped down, made newer lows, and then gapped up there. So that is one of the strongest charting setups, and I think you can see how that's panning out there. I covered Cornish Metals yesterday, rather grudgingly, it has to be said, but it was a bear trap reversal without a gap, and there was also bullish divergence. So that suggested that above the 9 3/4 pence level, we could be heading up to around 12 or 13 pence initially and up to 15 pence maybe by the end of next month. So it is good that I covered the shares. On to Hummingbird, which featured an interview with myself in the RNS today, which was obviously very flattering. Here you can see that we have bounced off the 1 year support, or the support from the beginning of this year. So the shares were started the year around the 7 pence area and have bounced off that, which is hopefully significant. We have been very oversold as well with a sub 20 RSI. Initial target here up to the 8.25 pence level, which was the old April support. Then hopefully after that, a journey towards the 10 pence level and August support, maybe by the end of this month. Onto a stock which I don't really look at very much at all. I don't think anybody else does either, Image Scan, but here we are. We've got a rising trend channel. Looks like we've had a bear trap gap reversal here. In fact, sort of double jiggery pokery there with a gap higher and then making a new low, but a bear trap gap reversal, recovering the 50-day line and the floor of that rising trend channel from December at 1.8 pence. Like to see the shares remain above the gap, so let's say above 1.7 pence, ahead of a move perhaps to 2.8 pence by the end of next month. Slightly early days there, but with the bear trap effect and the bullish divergence, one would hope that 1.7 will remain in place for that situation. Another dark horse is Intercede, and here looks like we're going to break out of this falling wedge. We've got a gap within the falling wedge, which tends to be a leading signal. Also got bullish divergence as well, so low lows for October, but a higher RSI trace. That suggests that above the floor of the gap at 44 pence, we're going to 60 pence by the end of next month, or even sooner. So punchy call there. Let's see if it works. Metro's been interesting in the gapology that it's demonstrated, apart from the bailout that the company had as well. Here we had the top of the gap before, 48 pence. We were looking for an end-of-day close above it to give us a turnaround signal. That's now become, or 48 pence has now become support above 48. We're looking rather simply for the previous resistance on the way down, 67, 68 pence over the next couple of weeks, ideally by the end of this month for Metro, but everything hinges on holding 48 pence. On to Serica, and here looks like we're in a broadening triangle base, August broadening triangle base. So we've broken above the 50-day moving average. We've had an unfilled gap to the upside yesterday. We've broken the high of the gap up day, which was around 235, and above 235, looking for up to 280 by the end of next month. Let's see if Serica can deliver on that bear trap gap reversal, which is normally a very good signal, or reliable signal. On to S4 Capital, which I suppose one almost feels sorry for, because it's been a complete nightmare, and maybe not all the company's fault, but two unfilled gaps to the downside. Just the first sign there with bullish divergence for the shares, maybe delivering a turnaround. While we're above the old September support there at 61 pence, looking for up to 80 pence, and a resistance line projection there from back in July. Ideally, we see 80 pence by the end of next month. On to the last two. First one is Tintra, which has got one of the weirdest charts around. Obviously, being suspended doesn't help a chart look normal, but we've bounced above a rising 50-day moving average. That suggests that a retest of the October high at £1.10 could be on its way, while we're above recent resistance, or resistance on the way down at 80 pence, if that's something which appeals to one or two people. Finishing off with YouGov, and here you can see it's a bear trap gap reversal here from below the old 1 year support. That was around £7.75, and above that we're looking for the 50-day line and September resistance around £8.60, hopefully by the end of this month. Just finishing off with critical metals, which I interviewed yesterday and forgot in this latest list. Here we've had a bear trap gap reversal, so a temporary new low there below 17 pence or 17.25 pence. Still looking for 22 pence by the end of this month, maybe up to the 200-day line at 24 if we are lucky. But the key here is that we've established support in the 16 to 17 pence area, which was the previous theory. That's it from me today. More updates tomorrow.